There are really just 3 dividend stocks that have all of my attention these days. Now, I call them my stocks in focus, and all of 2025, I'm going to be hyper focused on each of them to hopefully scale each position with them to over 100 shares. Now, have a quick look here, just comparing each to the S&P 500 over the longer span of time, say a 5-year period. One has performed almost neck and neck with the S&P itself, while the other two I would actually say right now are great value opportunities given recent current economic events and just our overall conditions in terms of economics. So that's all going to be changing soon. So today I want to run through my 3 dividend stocks in focus, present you with my case for each of them, and then ask all of you to do one thing come the end of the video. Drop a comment below with all of your thoughts on each of these dividend stock picks without holding back on your true thoughts. Or at minimum, just let the entire community know the stocks that you have in focus for 2025 or years into the future, aside from my stock picks. Now, I also want to warn you up front that my investor profile is crucial to understand, as I'm a 30-year-old investor with plenty of time to spare in the market and without a huge necessity for a high dividend yield, at least at this particular time. So each of these stocks actually just presents an insane dividend growth stock opportunity. Growth is key. But enough talking, let me cover the first dividend stock in focus, which I've actually been talking a whole lot about lately, United Health, ticker symbol UNH. Now, as of the most recent news, we all know that Brian Thompson, one of their executives, was tragically gunned down on the company's investor day after a parasite of a man cowardly murdered the executive, which has been just all of the news, at least as of late, when it comes to United Health. And of course, shedding light onto the denial rates within the healthcare industry and a lot of these healthcare companies. This negative press has been sending United Health on quite a downward spiral, but I personally was already buying into United Health before this murder, and my thoughts overall on United Health were quite simple. It is actually just one of America's largest healthcare providers and insurers, and with President Trump now coming back into the Oval Office, I was just suspecting that he would be friendlier than Biden was to United Health. However, I want to go ahead and take a look into the stock chart with you. As we can see here, United Health is down over 10% now on the year, and as you can see, just after Thompson's murder, the stock actually plummeted to its current share price of below $484 per share from over $600 per share. Yet click out to the 5-year chart with me to discover how it's been performing over the long term, up over 66% even after recent news. And continue to scroll down with me. We're going to see the income statement is actually very healthy, plenty of revenue flowing in, and a matter of fact, an increase in almost 15%, as well as net income increasing by over 11%. Scroll down once more to this balance sheet, which is actually why I love United Health. We're going to see over $273 billion in assets to just $174 billion in liabilities, with total assets now up by over 11%. Now, in terms of the United Health dividend, we want to go ahead and click into Simply Safe Dividends to see one heck of a safety score here, coming in at 99. That dividend yield only at 1.69%. But check this out. We're going to discover a payout ratio that's quite low, coming in at 29%, while the company remains on a strong dividend streak. But the best part, and this is why I really love United Health as a dividend growth stock, we're talking about an average dividend growth rate of 41%, which is just perfect for a long-term dividend investor like myself. Next up, I want to go ahead and talk about Visa. That's ticker symbol V, which is our transaction facilitator, which makes me insanely bullish on the company because Visa has completely just avoided all the risk of, say, the lending aspects of this game in terms of credit, while profiting from all of the transactions that you, me, and all the other consumers are making on a credit card. Now, honestly, the past year or so, I was not so impressed by Visa and its peers, just given consumers weren't really, well, I'll say, spending as freely as they once were years back. But if I look ahead, I do actually see quite a turnaround coming Visa's way in a future that will, at minimum, turn the sentiment around on the street for better or worse for everyone's wallets when it comes to spending. And that, in turn, will actually pump up Visa's bottom line. But as of this video, pulling up Visa's stock chart, we're going to see a stock that has already been climbing to higher highs this year, up over 21%, trading for $315 per share as of this video. Clicking to that 5-year chart, a solid run up as well, over 67%. Now scroll down with me to find that the revenue is up over 10%, net income up over 14%. Continue to scroll down to the balance sheet itself, where we're going to get a squeaky clean balance sheet as assets remain above $94 billion with liabilities just around $55 billion. But of course, we are here for the dividends. So let's just go ahead and click right into Simply Safe Dividends. We're ultimately going to get yet another safety score of a 99. Can't get better than that. Dividend yield coming in at just 0.75%. And as we scroll down here, we're going to find another very low payout ratio for its industry of just 21%. 21%, while Visa maintains a 16-year dividend streak. And it also is boasting right now a quite impressive 18% dividend growth rate. Now, investors, there you have at least two of my stocks in focus. And just before I cover the last dividend stock that isn't in my portfolio quite yet, but certainly will be in soon, I want to ask you directly to help me out by subscribing to the channel. It just goes a heck of a long way and shows me that, well, I actually made the right call in quitting my corporate job to go full-time here on YouTube for you. And while you're at it, tap on that thumbs up button just to let me know you want more content like this. Now, with that, here we go. Let's get to the most often overlooked Waste Management, ticker symbol WM, which is just your run-of-the-mill waste management, recyclables, and even a dumpster rental company. Now, is that the sexiest of stock picks? Certainly not. It's actually a bit trashy, if you will. But at the end of the day, one of man's, well, trashes is just another man's dividend. At least in this case, that's exactly what's going on, especially as waste management is really just one of two industry whales deeply threaded into municipalities across the United States collecting your trash. So a moat-worthy company that really has become quite a growth powerhouse over the years, especially more recently as the company continues to aim to revolutionize itself for an even greener future when it comes to your trash. Either way, let's go ahead and click into the stock chart where we're going to discover that Waste Management has been soaring lately, up over 17% year to date, trading for $211 per share. I want you to note that decline there rather recently, but more importantly, click out to that 5-year chart. We're going to see over 86% worth of appreciation, which is just head-to-head with the S&P 500 itself, often even topping it. And now scrolling down, we're going to find a company that has growing revenue streams as well as net income there, all while the balance sheet comes in nice and clean, even as a trash company, with over $32 billion in assets, just $25 billion in liabilities. Assets are in fact up over 4.6%. However, I would be in Waste Management for the long term and for that dividend. So as mentioned, we're going to go ahead and click into Simply Safe Dividends to get a look at these dividend metrics. Safety score coming in not quite as high as the other ones, but acceptable here for what it is at a 74. It's also going to boast a 1.56% dividend yield. Scroll down even further, a 41% payout ratio, which again is low for the industry, and a dividend streak of 24 years as of now, while the stock has been maintaining a solid average dividend growth rate of 33%. Now, each of these companies are at below or their fair values. They are, again, my dividend stocks in focus, at least for the upcoming year and the time being, as I clean up my portfolio and build up high quality positions. But now I want to know what you think. Lay it out there for all of us to see. Share your thoughts honestly on these dividend stocks, or just let us all know your dividend stocks in focus for 2025 while you're at it. Subscribe to the channel and be sure to also click into this video right here where I go over some of my biggest dividend investment mistakes that I want all of you to avoid in order to make sure you don't leave any money on the table. With all of that said, I will catch you all in the next one.